Hi, good afternoon, everyone. You are very welcome to today's webinar on the EU Omnibus and what this means for businesses. My name is Kathleen O'Regan, and I work in the Sustainability Solutions Department of Enterprise Ireland. Please note that today's webinar is being recorded and we'll share the recording afterwards, as well as the slides. We'll have time at the end for Q&A, so if you have any questions at any stage during the webinar, please just pop them into the chat. So this is our last webinar of our current series. We do plan to host more webinars later on in the year. So if there's any topics that you'd like to see us cover, please just let us know. If you joined us for our first webinar on sustainability trends for business, you will have heard from Johnny Meehan and Liam McKenna of Forfis Mazars, and they discussed the many elements that are influencing corporate sustainability goals, ranging from the accelerated climate change, geopolitical events, sustainable procurement and supply chains, and changing regulations. And this ranged from what's happening at a global level to the EU level to what's happening here in the Irish context. They discussed the EU Omnibus package of proposals, which was announced on the 26th of February. And this package of proposals aims to reduce the sustainability reporting burden, particularly on SMEs, but also large companies who employ less than 1,000 employees. So in last week's webinar, we heard from Caroline Gagan of CG Business Consultants, and Caroline focused on the new sustainability reporting standard for SMEs, the VSME for short. Today's webinar will focus on the EU Omnibus and what this means for business. And we're delighted to be joined today, or to host today's webinar in collaboration with Centigo Ireland and UK. Centigo are a Swedish headquartered company which focus on business well-being and sustainability, helping clients address climate risk, energy resilience, circular economy, social impact, waste, water quality, green finance and regulation. So we have a panel of speakers joining us today, and we're going to be joined by Ray Nolte, who is Managing Partner of Centigo Ireland and UK. Ray is a specialist in strategy, business transformation and innovation. He is currently working with UCD, Fineos, Bord na Móna, Port of Cork, and several other firms under sustainability programs. We are also joined by Gabriel Darcy, who is Managing Director of Centigo. Gabriel is an experienced Irish business leader with a diverse career spanning military service, corporate leadership, and entrepreneurship. His corporate career includes roles as CEO of Lackpatrick Dairies, MD of Bord na Móna, and head of Curry Group Europe. We are also joined by Francisco Granja, who is head of legal at Seymour. Seymour are a Portuguese technology company specializing in ESG software. Before joining Seymour, Francisco worked at Galp as a legal counsel and human rights specialist. And finally, we're joined by Ankit Kumar Das. Ankit is a senior manager at Centigo Ireland, specializing in sustainability, strategy and transformation. And prior to joining Centigo, he was a member of the PwC Sustainability Assurance team. So it's great to have you all on board. And Ray, I'll hand over to you now.
Thank you very much, Kathleen. I'll just share my slides. Can you see those now?
They just take a second to come up, I'd say, Ray. Yep, that's perfect. We can see them. Thank you.
Good afternoon, and thank you for the opportunity to address this group. So what we're going to do is we're going to run through this agenda, and it's really going to be an interactive panel session where Gabriel, Francisco, and Ankit will answer various questions and share their perspectives on the various issues. So effectively, what we'll be covering this afternoon is what is the EU Omnibus and why it matters to business. How has the EU Omnibus changed companies' approach to sustainability? What are the benefits of voluntary reporting? Is it really voluntary sustainability reporting? What are the businesses impacted by the EU Omnibus actually doing to prepare at the moment? And what should companies expect exempt from CSRD be doing? And then some closing remarks to summarize it, and then an audience Q&A session facilitated by Kathleen. Right, so the first point that we're going to talk about is what is the EU Omnibus package of proposals and why does it matter for business? Well, I think for those of us who have been looking at it very closely, and particularly in the run-up to it, we noticed that Germany and France in particular were heavily lobbying the European Union to address this. and they weren't only lobbying, but they were also providing very valid suggestions in terms of alternatives. I mean, their concern was primarily around the cost, the time frame, the complexity associated with CSRD, which was very valid. And I think they gave quite a lot of direction to the European Commission and EFRAG in terms of the use of the SME and also the equivalent for listed SMEs, LSME. And if you look at the market at the time, we were seeing those organizations who were preparing, particularly for wave two. And then there was a lot of panic, if you like, for those organizations who hadn't started, who weren't prepared, and those who were late to the process. And typically what they were concerned about was complexity, cost, resourcing of this, began to get done in time. And many of them were being challenged, depending on the sector they were, but generally the challenges were on the environmental side. And then I think on the other side of this, we had the financial institutions and insurance companies and the investment sector who were lobbying very heavily to keep this. And indeed, those organizations in wave one who prepared felt they put a huge amount of investment into this. And they were also keen for this to move forward. The Commission probably wanted to water down CSRD quite significantly compared to what came out in the EU Omnibus proposal. But effectively, what we've got is two key elements to this. One is the timing, which has been changed, and then the other one is the threshold. And we're probably all aware of both of those. But it has had a huge impact on reducing the scope of this for a lot of organizations, and consequently a lot have actually fallen out of scope of the as a result of the EU Omnibus. The first question here I'd like to pass over to Gabriel Francesco. Why do you believe the European Commission felt it necessary to introduce such a significant simplification package at this time for sustainability reporting?
Yes, thank you so much for your question, Ray, and hello, everyone. Greetings from sunny Lisbon. Thank you for your question. It's super important because I think we need to contextualize this conversation into the reason why. And the reason why for the Commission was, it put it in a word, competitiveness against burden, because competitiveness is at the core of the EU's Commission project for Europe at the moment. Including through the competitiveness compass, which is a political and economical perspective on how to make European companies more resilient, but also more agile. And the idea was that somehow the regulatory landscape, so the legal and regulatory obligations over European companies, the regulatory burden was making Europe's economy slow. So it was slowing down companies. So the idea, the reason why was, okay, we have to foster competitiveness. We have to put the companies working faster, more agile in order to compete in global markets. So I would say that competitiveness is a core idea, but also there was this focus on trying to make more SME friendly the regulatory framework, because obviously huge companies have the resources to go through heavy and detailed sustainability reporting procedures or sustainability due diligence procedures, but that's not the case for SMEs. So the idea was to make a more proportionate approach to the burdens of regulatory affairs. And on the third part of the answer, I would like to stress that also there are more than 600 reporting frameworks globally, and the EU Commission wanted to make sure that the European one is streamlined between our own European standards, but also with global standards. So I would say, to put it on a nutshell, competitiveness, simplification, and removal of burdens.
Thank you, Francesco. There's another question there about which industries will be most affected by the threshold changes and why. I think that's an interesting question that we know there are estimates certainly around the number of organizations who have fallen out of this, but you could also argue that there are certain industries who aren't impacted by this, who probably should have been impacted by this. Now, for example, the threshold changes disproportionately target or impact labor-intensive industries with high employee counts, but with relatively modest turnover. So you could have a lot of employees and a relatively small turnover, but still be left in there. Retail is another industry, hospitality is another industry, which probably have not fallen out of this as much as they should be. And then, you see, for example, in some countries, for example, I saw figures for Belgium the other day, where 73% of manufacturing companies who were previously in scope for Wave 2 have actually fallen out of it. But, they only represent anyway 18% of Belgium's environmental footprint. So, it's an interesting set of targets. It was a very simplistic view in terms of thresholds. Does anybody else have a view on, from their own experience, of which industries are particularly impacted by this and why? Well, I would certainly say that some of the clients that a lot of our clients have actually fallen out of the threshold, but they still, because they're in, for example, the commercial state sector, certainly they have other reporting threshold or frameworks that they have to follow. There's other sets of requirements, and what I would say for them is that in many cases that CSRD was formalizing quite a lot of things they were going to address anyway, particularly on the governance and the social side, and that whilst there were maybe a lot of work on the environmental side, they still feel that it's particularly worthwhile in pursuing those issues as well. So the next area is, how has the EU Omnibus changed companies' approach to sustainability? And we've seen that the 70% reduction in mandatory ESRS data points is going to be quite a crucial thing. We've also seen that there's been the elimination of sector-specific reporting standards, and I certainly would question that for some of our clients, because some of the industry issues are actually quite important, and the generic overarching reporting within CSRD kind of hides those things, and they're still probably worthwhile taking a look at. But I would say, following this, we were engaged with a lot of organizations, or we're having conversations with organizations who were about to ramp up. And I would say any of those organizations that we spoke to during that period, the first part of the period, they basically didn't continue on with their CSRD preparations, or didn't start those CSRD preparations. We've seen a lot of professional services companies in the market actually ramp down their resourcing, particularly on the in the accounting profession, on the insurance side, and also in some of the consulting sides. And however, I would say that any of our clients who are engaged in this, certainly from a Wave 2 perspective, they've continued on. They have actually taken advantage that this has allowed them focus on the more strategic aspects of sustainability. So activity was diverted from what I would call the tail wagging the dog activities to the more important dog type activities. And I would say that, even though they're looking at VSME and probably trying to predict what's going to come out in November in an enhanced version of VSME, what they're doing is they're still looking at multiple frameworks. We've got clients who are saying, okay, well, how do we take into account VSME, EcoVadis, CDP, for example? I think there's a greater focus now, particularly since the EPA announcements of last week or so, around greenhouse gas reporting and concern about carbon taxes. And I would also say that, and this is probably the most important point, is that most of our clients are really focusing on investor reporting and reporting to their lenders. and the strategic opportunity, as well as the burden associated with this type of reporting, has been very much in focus for those organizations. So the next question I would like to ask is of Gabriel. So following the Omnibus proposals, what sustainability metrics are companies choosing to prioritize?
Yeah, an interesting question. Thanks, Ray. I suppose, and good afternoon, everyone. I suppose in one sentence, those metrics and those approaches that have a clear business benefit as well as aligning with sustainability goals, they are the ones now that companies are prioritizing. They're prioritizing a lot of the elements of E, S, and G, but those in particular that have clear business benefit. So, for example, if you take carbon emissions reporting, that's now nearly universal amongst all companies, all of our clients. A lot of this is driven by larger customers demanding information and requesting information from their suppliers. Big dairy companies, for example, here in Ireland and internationally, they've, following a materiality assessment, can see that there's more, if you like, bang for their buck in prioritizing farm level emissions in dairy supply chains where there's likely to be the greatest impact, rather than doing a whole plethora of Scope 3 emissions. So certainly carbon emissions is one area that's been prioritized. Somewhat associated with that are energy efficiency metrics. They continue to be widely reported, again, because of their dual benefit. For most companies, there's clear benefit in looking at energy efficiency in terms of cost management, as much as meeting sustainability goals. Similarly, in water stewardship and water use, particularly in those large water intensive industries like food and beverage, like many of our clients here in Ireland are dealing with this, and they can see the benefit of adopting a more sustainable approach to water and indeed emissions management, but they can also see clear cost benefits. I suppose lastly, the whole area of social metrics around workforce development, diversity, they're becoming prominent, and it's not because of obviously there's a reduced requirement because of this in terms of mandatory reporting, but they can see that expanding their social impact reporting it's very important for their talent attraction, talent retention, and their actual reputation within the marketplace that they serve. But certainly you can see the benefits of this simplification process in the sense that companies now have a little bit more flexibility rather than going after all the famous 1,300 data points, that they can now prioritize those areas that have got the greatest bang for the buck and the greatest business benefit as well as sustainability benefit.
Thanks, Gabriel. Just to call out a couple of points on metrics. From a survey that was done recently by the European Union, they said that it showed that 83% of companies are maintaining their headline sustainability targets. And I also read something recently that in Intesa Sanpaolo, they've documented 220 million in new business directly attributed to their sustainability disclosures, and helping them to attract new SG-focused clients. Philips, for example, in their annual report, they said that they were able to achieve a 20% lower cost of capital for green bonds compared with traditional financing. So there are plenty of examples of organizations out there who have benefited from these sort of reporting requirements. We've all heard about Patagonia and others. Sustainability is core to what they do, and certainly it's a really important principle in terms of of them as an organization and what they try to do. But fundamentally, the tangible benefits that we're seeing from maintaining the same sustainability ambitions and reporting is improved investor relations, enhancing your brand reputation, increasing the attractiveness of the organization to employees, either for engagement or retention, and indeed better risk management. So moving on to the next slide, where we're going to look at what are the benefits of voluntary reporting. I think the first thing I would say is that sustainability issues aren't going away. You can't, we're faced annually, daily with the challenges of climate change. We're seeing, resource shortage in areas where we wouldn't have expected to see them, and resources in key categories are beginning to run out. What we're seeing is that sustainability presents a strategic challenge for all organizations, which needs to be addressed. And certainly there are stakeholders out there who would expect it to be reported on. I would also say that, and this is back to Kathleen's point from Kathleen at the start, we're seeing that the focus is going from regulation to much more customer-orientated reporting. So it's, what do our customers need? How do we use it to maintain our customer base? How do we use it to grow our market share? How do we manage risks? Certain clients are worried about, potential taxes and bonds, and consequently, that's where the focus on greenhouse gas for them, so they can make a case that they will not be caught in that net. And then obviously it's the more favorable financing and insurance requirements as well. So my next question is for on how are investors and financial institutions responding to businesses that offer voluntary disclosure? Francesco, would you sharing an answer on that?
Yes, absolutely. And thank you so much for your question. Well, the truth is that financial entities are excited about reporting, right? Because if we think that financial institutions are themselves under legal obligations to report their portfolio's ESG maturity, if these institutions are under this obligation, they want to collect this information to the portfolio they are invested in. So there is a value chain effect, right? So if the bank needs to report on their ESG efforts, they want to collect the information from its investments. So I would say that investors and financial institutions are really, really trusting, and I would say almost prioritizing those entities that adopt sustainability disclosures, right? And they are increasingly differentiating between those that do and those that do not, keeping a clear preference on companies that report this in a robust and good way. Because obviously we've been seeing a lot of sustainability reporting, and like everything, some are good, well done, and others are not so well done. So it's not only about doing ESG reporting, it's also about doing ESG reporting well. And investors and financial institutions are keen into good quality ESG reporting. So I would say that this is the main idea. I just wanted to share that a recent Goldman Sachs study found that companies voluntarily reporting under the VSME framework that we've talked about and you've discussed on your previous webinar are trading at a 12% premium compared to peers with similar financial performance, but without sustainability disclosures. So we know that the existence and the robustness and the quality of sustainability disclosures are actually shaping the market and are actually attracting financial institutions and investors, which seems only logical, because if you have a strong ESG reporting, you have good governance and you have a more robust strategy around sustainability, so you are necessarily attracting talent, you are necessarily mitigating risks, you are necessarily having a long-term view of your company. So sustainability is a purpose in itself, but it's actually a business case as well. So the fact that investors are looking at this clearly show the way that this is the next economic shift. So it's the putting into the cash where ESG reporting is strong.
Thank you, Francesco. Anke, a question for you. How can businesses effectively communicate the value of their voluntary reporting to stakeholders?
Thanks, Ray. Good afternoon, everyone. Good question. I think companies must realize that to communicate their value, the real value of voluntary reporting, they have to go beyond just reporting. It has to be stakeholder centric. It has to engage with them in a meaningful way, and it has to have strategic value to it. A lot of the leading companies across the world are choosing multiple channels approach. Some companies they are going ahead with reporting as they have been doing. Especially we have seen this trend with the ones which have large number of employees. They're sticking with this. One of the key things that we have to understand is, for customers, the key thing is relevance. If you're bringing in relevant information to the customers, they would value it. One of the good examples that I saw was from Danone. They are choosing to do carbon labeling on their products, which is a great example, because the customer who is taking the products, they understand what they're really doing, what they're purchasing. Another crucial audience that I think is the employees. If you are able to inform the employees what the company is really doing, they are much more happy with to be part of something that is created. The different companies choose different methods to communicate. Some companies just do reporting, while some also do a live demonstration, have dashboard kind of a view. Siemens have done that. There's also another way we talk about dashboard. Dashboard is it's not just about reporting, because now we are seeing we have this trend of sustainability reports coming every couple of weeks from different parts of the world. The idea is how do you really show the important key elements of what you have done in that annual year. And if it is sitting in a PDF form on your website, it is very difficult for anyone to read. So if you have a really good dashboard to show all of those information, that brings a lot of value. Francesco mentioned assurance. I think it is one of the most underrated things. Like, even if it is voluntary, but I would say having to if you're able to get your metrics validated by third party, I think that goes a long way. A lot of we have seen during our previous stakeholder engagements with different banks and lenders, key lenders, they are stressing upon getting these the data verified from the companies. So I think it is very important that we do not just put we see a lot of value in voluntary reporting and try to bring more value out of what we are doing, because it exists there for everyone. Yeah. Thank you,
Ankit. Now to one of my favorite subjects: is voluntary sustainability reporting really voluntary? And we've worked with a lot of organizations, particularly in the procurement supply chain functions, where they've included within their supplier conduct that their preferences for organizations who apply and follow a reporting framework, a voluntary reporting framework. And if you are a supplier to these organizations and they're an important customer, well, chances are that you would probably want to follow it. So it's not really voluntary. And we're seeing very often tenders and contracts with strong sustainability requirements in them, which necessitate actually capturing data and reporting on a regular basis. We're seeing insurance companies and lenders, we mentioned earlier, doing it. And then we can see a situation where tax returns may actually require you to report on your carbon emissions in the future. It's interesting that we were talking to a client that we're working with, and we were helping to put together the supplier questionnaires, and their answer was, well, we're not worried about the small players because they will do it. They're very keen on the business. The larger players, the larger suppliers who won't provide it to us. And we've seen a situation where relatively large organizations, they are refusing to provide their customers with information. And part of that's driven by the fact that they're getting all sorts of different types of requests for information or inconsistent requirements, and sometimes requests for information that probably doesn't make any sense for them. So there is a lot of pressure on organizations to provide information. And on that note, Gabriel, what pressures do you see your clients experiencing from larger clients regarding sustainability data?
Yeah, it's an interesting question, and you're coming on to an interesting topic, picking up a little bit what Ankit has said. As an overview, I would say that there's a famous statement, culture eats strategy for breakfast. Well, I would say when it comes to sustainability, culture eats sustainability strategy for breakfast. So we have to understand this concept of, well, is this something that we want to do? Is it part of our business model? Is it part of our value proposition? And is it something that we're going to promote? And we're doing it for good business reasons. In other words, it's a critical part of our business model, given all the environmental, all the background that you said. Or is this purely a compliance exercise? Like recently, there was a survey of over 500 SMEs in Europe. They found that 67% are receiving sustainability data requests now from major customers. Although these data requests are becoming more standardized, proportionate, and so forth. So you could argue that this has been driven by their customers, and they have to modify their business model now, because you can't tell lies on this thing. You have to tell the truth. Interestingly, Volkswagen, I see recently, they effectively got rid of what was one of their key sustainability questionnaires to all of their suppliers on 142 points. They've changed that, and they have now embraced the VSME, the voluntary small and medium enterprise basic module that EFRAG has published. So you can see that actually there is a move now to get companies to embrace this. Similarly, large retailers such as Tesco, Carrefour in France and elsewhere, they're actually, instead of giving out, their particular requirements, they're actually aligning those to what you would generally you'd call industry standards. So most of these are aligned with the VSME module, and indeed that's something that we do. A lot of the work that we're doing with our SMEs are actually getting some of the VSME, which is a perfect precursor to what was the CSRD. It's a perfect way for SMEs that are wondering what's the next step. That is the next step. Another driver here, of course, is the state sector. Anyone who is looking to supply into government sector, the government's climate action mandate is still there. And anyone who has gone after a government tender will know that there's now a detailed sustainability information section, and it's in most government tenders. So the pressures that, if you want to go after a government, well, obviously there's a pressure there. If you're supplying into retailers, there's a pressure there. If you're actually supplying into the consumer markets, consumers are becoming more conscious of this. So there's a pressure there. So it actually is very much, it's not like we have a business and now we're pulled this way. The business model has to embrace it in all key elements of the company's business model. And the best and easiest way for 90% of the people who are on this webinar is to actually embrace the VSME and look at that. And it's a step by step. There's 3 modules in it, depending on your size. And that, if you achieve that and accomplish that, and we can help you on such things as embracing some of these modules, then you will be in good stead with your customers, but also your employees and your stakeholders. They'll want to work for you. Your customers will want to buy from you.
Thank you, Gabriel. A really interesting element of the Omnibus is the concept of the VSME shield. And effectively what that's to do is to prevent larger organizations imposing unreasonable or large requests for data on particularly small and micro, certainly smaller organizations. Now, this hasn't really been tested in the enforcement authorities. There's only been 3 complaints made under this so far since the Omnibus. And my sense is that we've used it quite a lot for our larger clients because they've been very worried about imposing undue reporting requirements on their smaller suppliers who they're trying to develop and grow. And it's been a very useful concept. And I think my sense is that certainly with our financial services clients and regulated industries, like I know Gabriel's working with a client who supplies one of the big pharmaceutical companies in Switzerland, it's working quite well because of the regulatory infrastructure and culture within those organizations. However, in more competitive industries where there's a lot of supplier competition, whilst they're aware of the VSME shield, those companies, they seem to be favoring those organizations which go above and beyond the level of information that will be required, the de minimis information. And the other thing that's quite interesting here is that the European Union carried out a survey, and they found that only less than 35% of organizations, small, medium-sized organizations, actually realized that there was the VSME shield protection there. So clearly there's a lot to be done in terms of making SMEs aware of this protection and how you would deal with organizations who push you to meet more than those particular requirements. Francesco, a final question for you on this section. Are banks and investors treating sustainability reporting as an implicit requirement for SMEs?
Thank you so much, Ray. I would say that they are not explicitly mandating for this because they would not have legal ground for it, of course, but indirectly they are. It's the exact same principle that Gabriel just told us. It's the fact that pressure is coming from the market itself. So when the EU Green Deal was first drafted and it was first designed, the intention was precisely this one: to put money flowing into companies with better ESG performance. And what other way for financial institutions to know where good ESG performance is than through reporting? So I would say that definitely banks and investors are treating sustainability reporting as an indirect requirement for granting their subsidies and granting their financial supports, because the numbers actually show that this is happening. So according to the European Banking Federation, 72% of European banks now incorporate sustainability criteria in lending decisions. So they can do this in different ways. It's not harmonized, but the fact is that sustainability criteria is being integrated into lending decisions. And we can see this everywhere. Gabriel told us about the public tenders, but when it comes to the financial sector, this is really, really true. Also, the European Investment Bank and the European Investment Fund have been particularly influential by incorporating sustainability reporting into eligibility criteria for their SME financing programs, which reach over 180 European SMEs. So this to say that you see a mix between EU-based banks and private banks really incorporating ESG information into their decision-making. So I would say that there is an indirect, implicit requirement for SMEs to access funds through banks and investors, although this is not yet prescribed by law. And as we've seen, the VSMEs are voluntary standards. The market shows that they are gaining more importance every single day. So yeah.
Thank you for that. Something's happened slightly here in my slides. So the next area that we're looking at is the apologies. Yeah, what businesses that are impacted by the Omnibus proposal, what are they doing to prepare? Well, we've got basically two broad categories of organizations we're dealing with. Those who are would have been wave 2 and wave 3, and they're been delayed in terms of the reporting. And what we're seeing those organizations doing is they're actually either implementing the LSME or the SME reporting framework this year as the basis to move forward. They're also normalizing the data requests and requirement with CDP, EcoVadis, and maybe some other frameworks, depending on where they have to report. So they're building up a certain a centralized single version of truth in terms of the data that they're working towards. And effectively, what we'll see is that this year they'll report under those. Next year they'll report somewhere between CSRD and where they are at the moment. And so it's a progressive development. I would say for all of our clients, they still have very strong market expectations from their stakeholders. And every one of them have completed a materiality assessment. Indeed, they've all completed or in the process of completing double materiality assessments. And that is being fed into their strategic and corporate plans. And I would also say that they're all progressing their GHG emissions reporting. I think what we've seen is up to now, they've been very strong in 1 and 2, and they're getting very much real about scope 3 and the difficulties associated with that. And indeed, scope 1, particularly in terms of some of the rogue emissions and some of the other areas which probably weren't done as well. But what I would say overall is that these organizations, they're looking at compliance in a much more holistic, transformational way. This is just one of many compliance requirements that they've got. And so what they're doing is they're looking at sort of a transformation process that's there. I would say they're all looking at how they can achieve competitive advantage. And what I would say is that some of the clients that we're working with are probably looking at revolutionizing, and I'll use that word carefully, revolutionizing their business model, because they can see very large opportunities as a result of this. And then I would say that, and from some of the organizations that we're talking to and some of the international conferences that we attend and our colleagues attend, there's this sense of sustainability hushing. There's a lot going on, but people aren't talking too loudly about it, given the political environment that particularly in the US. But we're surprised at how the level of momentum that's actually still in place over this. So my next question is, to Gabriel, what specific preparations are Wave 2 and 3 companies making during this extended timetable they have as a result of the Omnibus? Gabriel, you're on mute.
Sorry, my apologies. In general, there's 4 main approaches that companies are using in our experience in Ireland and indeed internationally. And I'll outline those approaches in a minute. First of all, I would say that in all cases, and I'll speak about these approaches, in all cases, there are outstanding Enterprise Ireland supports available. There's climate action vouchers. Many of our smaller clients that would be a first step. There's Green Start program. There's Green Plus programs. I don't think, and Ray mentioned that I do some work internationally. I'm actually working with an SME in Switzerland at present, and actually we've had some discussions about what kind of supports are available to them. Now we're helping them on their journey, and this is in response to demanding requests from some of their biggest customers. They're in the biopharma sector. And actually, they don't have the same level of support that Enterprise Ireland have here. So it's a huge level of support that the Enterprise Ireland are giving to the SME sector in this domain. Generally, in terms of preparations, there's generally four main types. So companies are using the time, the extra time they've got to really deep dive into real materiality assessments and looking at the truly significant sustainability topics, rather than what they were doing in the past, doing a comprehensive reporting across all issues and dissipating that. So it has given companies a chance to zero in within their supply chain, within their own operations, in terms of what are the truly most material areas that they need to focus on. Others, as we all know, are investing in data infrastructure, and Francisco would be very familiar with that, because that's where Seymour come in. We work very closely with Seymour. We're partners with Seymour, and they have some awesome data management, data capturing, management, and processing tools to set you on your journey. Because otherwise, as Ankit was talking and others, otherwise this becomes a mountain of spreadsheets and stuff from and it's just very, very difficult to manage. So even a relatively small company needs some kind of a tool to collate this together and to indicate, well, what are the next steps, and to prompt you in terms of certain, and that's linked into various different models and best in class technologies. Other companies, they're responding by actually building up their own internal expertise. Like, they're bringing in experts. They realize that we need to understand this. We don't have this because we're in cosmetics, or we're in engineering, or we're in food, or whatever. You need some level of knowledge and expertise. And a lot of that is bringing in, promoting sustainability champions in different departments and so forth. And of course, lastly, as you have in every walk of life, you have the wait and see merchants, and a significant amount, maybe upwards of 30%, and they're just doing the minimal amount and just seeing, some of them believe that this will all go away, similar to what seems to be happening in the United States, and so forth, whatever their motivation is. But over 70% of certainly of our clients see these initiatives, such as I said, their data infrastructure, materiality, building capability, as a strategic exercise more than a compliance one. And that's the important, because that demonstrates to me, and it demonstrates to others, that actually they're embracing this. They understand it. They know that's what their market wants. That's what they really want to do inside. Who doesn't want to be kind to the planet? So I think it's that move to and moving along a strategic pathway rather than just ticking a box to be compliant. So yeah, that's in the main the preparation. Ray.
Just in the interest of time, so that we finish in time and give an opportunity for the audience to ask questions, I'm going to ask just two more questions. Gabriel, I think you've answered question 3 just lovely there on what we have there. So the first question I'm going to ask is to Ankit. And can just keep your answer to about a minute long, and the same to Francesco. So just 2 questions. First one to Ankit: what sustainability activity should potentially exempt companies prioritize?
Well, to keep it short, the first thing is they should be prioritizing what is the real value, what activities bring real value to the business. There are some really easy no-brainer ones. Think of energy efficiency, emission reduction. You should also look. The company should look at looking at their supply chain. Making it more resilient and less carbon intensive. You should also think of if engaging with your own employees. Sometimes what happens is your employees, we have seen it in the past that one of our clients did not have to do it, but because the employees responded so strongly about sustainability that they had to start doing it. And another thing is that you have to keep in mind that even smaller companies, like even if they're exempt, it is it is very important to continue what you're doing and understanding what your business really needs. So tying your business to the sustainability maturity that you have is the key.
Thank you, Ankit. So increase profit, reduce costs, increase your attractiveness to your customers and your suppliers. Very good. Francisco, the question: how should potentially exempt companies respond to information requests from partners or customers still subject to CSRD?
Can you repeat that, Ray? Sorry, slower a bit.
Yeah. How should potentially exempt companies respond to information requests from partners still subject to CSRD?
Oh, good. Well, just to add to the first question, I think that companies should prioritize a double materiality process, because double materiality processes, even if the small or medium company is not obliged to do a double materiality process under the CSRD, it will give you a direction of where to start in your ESG journey. Because for one company, climate might be super important, but for another company, human rights might be super important. So it's crucial to start with an impact and financial analysis of the relevance of ESG, in my opinion. And coming into your question, I think that to use digital tools, it's crucial, because we cannot do this in Excel and email. Like, we need the help of digital tools in order to make sustainability efficient, and in order to see it as added value. So if you are using digital tools to gather, collect, and think of your ESG information, what happens is that when companies or partners ask you information under the CSRD, you will have your reports ready to pass them to. And I would say, if you're a SME, use the VSME standard, because it's adequate too. So yeah, that's how I would put it in my 1 minute break.
Thank you very much. So just some closing remarks. The Omnibus, as you can gather, is potentially a very significant recalibration of sustainability reporting, and it's not an abandonment of goals. The Commission are very, very adamant that this does not water down the commitment to sustainability, and we can see pressure on nations and organizations and industries to improve their performance from all angles as well. Thankfully, I think the process creates some big breathing room for organizations who weren't prepared. But I don't think you're going to get away with that going forward. You've been given, organizations have been given plenty of time, and I wouldn't underestimate the time actually required to get ready, even for some of these, even the more simple VSME reporting requirements. However, I would say to organizations is that, whilst we have this view of comprehensive VSME or LSME, we're not sure what we're going to be getting in November, which is likely to be probably more rigorous than the existing VSME regulations. So we need to be aware that it's not, there's still quite a level of negotiation to be done in order for us to come to the final reporting requirements. And if you look at the pushback from various groupings around Europe in terms of reporting requirements, there is a lot of pressure, particularly from the European Parliament, to maintain a higher standards. I think you need to remember that voluntary reporting offers strategic advantages beyond compliance. There are plenty of examples of that. And businesses are using this approach now to become a lot more strategic, a lot more authentic in terms of their sustainability approach. And climate change, sustainability, resource shortages, etc., is a business imperative, regardless of reporting obligations. We were in a situation where it was a tail wagging the dog. Now we have a chance to actually get the dog in control of its tail, if that makes sense. So handing over to Kathleen to take questions from the audience.
Yeah, thanks, Ray. Look, and thanks to the panel for sharing your insights there. And I think, I mean, what really come out for me, I suppose, is that, you know, now is the time for all companies, regardless of sector and size, to prioritize the areas to focus on. And that might be through that double materiality assessment by engaging with your stakeholders, both internally and externally, benchmarking against your competitors. But really kind of taking that step to prioritize the areas to focus on, you know, forming your sustainability team. No one person can do this, and make sure you have that kind of senior leadership buy-in, and developing an action plan around that, and not have the worry perhaps of compliance, but have that time to actually focus in on those really impactful areas, because it's not about the focus kind of went straight to reporting because of the CSRD, but it's kind of taking the step back now to actually, yeah, to take time and develop an action plan and report on the actions taken rather than jumping straight to reporting. But the VSME standard, and I think the new ESRS standards, will be really useful frameworks, considering up to now we've had so many different frameworks. So look, thanks for sharing your insights there. We have 2 questions in, but if anyone else would like to pop a question into the chat, we have a little bit of time to answer them. So the first question is from Helena, and it's just in relation to the reference to third parties and validating, I suppose, sustainability metrics and data, or verifying. And I suppose, look, just from my own perspective, there's various different standards, like ISO standards that the companies can certify to. There is, which are third party, you know, and recognized and recognized internationally. Just disclosure platforms. EcoVadis actually comes up quite a lot, B Corp, CDP. So there's third party recognition. There's verification, and that can be maybe verification of your carbon footprint. But if you're going down that route, it's just to make sure, I suppose, the verifier is an accredited verifier. And that's something to keep an eye out for. But then it's the timing of this. Is your customer looking for verification? So if, for example, just with carbon footprinting, if you're looking to get it verified, it's valid for the year, and you need to repeat that, and there's costs associated with that. So it depends on the company, it depends on the sector, the size, what your customer is looking for. But we did actually have a webinar last year on sustainability standards, kind of the broad range of sustainability standards. So it's definitely worth looking at the broad range of standards that are out there, seeing what your competitors are doing, benchmark against them, and seeing which standard is the most appropriate for your company and your sector. But if anyone else has any additional comments perhaps to that.
Yeah, there's a global company in Switzerland called SGS. And they started off as an ISO standard verifier, but what they're doing now is they're providing quite a lot of verification for larger organizations in terms of the metrics and data provided to them by their suppliers. Now, it's not an expensive thing. I think typically it's about a €500 cost for the supplier to get themselves verified by SGS. But I think what we're beginning to find is that there's these kind of industry type utilities who are emerging, like SGS, who provide that type of data into the market, which is incredibly useful.
Just to say that we do work with SGS, and they are our partners as well in the certification of carbon footprint calculator and all of that. So they are actually super good, just to stress that with Ray's answer.
But yeah, no, that's great. And then just there's a following question then, and it's just in relation to green bonds. Has anyone on the team got expertise, I suppose, in relation to green bonds to be able to answer this question? We might leave that for another day. Or Ray, is that something that you want to?
I have. Francisco, do you have before I go into that, have you?
I have actually never issued a green bond. I've been in process to evaluate the social dimension of green bonds, to take a look at human rights and due diligence. So I would not consider myself an expert in that field. But if you want to put a question, I think it's super interesting. Yeah.
Yeah.
Yeah, I've been involved with a group of central banks under the ECB in Europe since for about 10 years now, where we've been looking at this particular market, this particular opportunity. It's a growing area. and certainly there's a very strong commitment with impact funding within the European Union and amongst best investors to include a premium or a preference around this. I guess you know, I can only talk about Europe. I haven't looked at the Asian markets for some time, but fundamentally the issue around stranded assets, the issue around risks associated with climate and social change, if you like, are being factored into the pricing of these particular bonds, and it's a much more attractive mechanism for anybody who's got large capital or infrastructure expenditure. So I think it's a really worthwhile taking a look at, and certainly it's something that I think almost all of our European clients are looking to in terms of their master plans for their infrastructure organization or their planned capital expenditure.
That's great. Thanks for that. I don't think we've any more questions coming in, so I'm just conscious of time now. So what I might do is just share my screen and let's see. I suppose first just to say thanks to the panel today, and thanks for sharing your insights. And before we just wrap up, just I suppose as a reminder to everyone that Enterprise Ireland does have a range of supports to help companies, and whether that be around aligning to an international standard, whether it be help with actual sustainability reporting, aligning to the VSME standard, calculating your carbon footprint. We have a range of advisory and training supports to build capabilities, and then we have our capital investment supports in metering and in decarbonisation and moving away from fossil fuels, and then a range of R&D supports which range from an innovation voucher to our larger R&D supports to develop more sustainable products, processes and services. So look, if any of these are of interest, I won't go into them individually, but please reach out to your client advisor or reach out to the Sustainability Solutions team. We have been running sustainability Kickstarter workshops and sustainability leadership programs since the end of 2023. We've had about 500 people take part in the Sustainability Kickstarter workshops. 130 companies roughly have participated in the Sustainability Leadership Programme. The programmes are full at the moment, but we will be running them again later on in the year. So if this is of interest, please do reach out, and we can just to keep a record of your details as an expression of interest for now. We will be running webinars later on in the year, as I mentioned at the beginning. So if there's any topics of interest there, please do let us know. But as ever, thanks for joining us. And for more information, you can visit our website, email green@enterprise-ireland.com, or reach out to your client advisor. So thanks very much, everybody. Thank you. Bye-bye.